Hi all, and thanks for tuning into Countdown right here on BloombergQuint. I'm Neeraj Shah, with me are Devina as well as Navneet, and let's kickstart the show with what's happening to the markets, because it's been a buoyant day for the markets, all right. About 3% higher for the benchmark indices even now, and the banks are still leading the charge higher. So about 3.2% for the Nifty Bank as well. But what is actually leading the indices, the top 5 gainers, that is, are not banks, but the auto stocks and to an extent pharma names. So Cipla continues to be on a roll, still up about 12% in trade. Really good show put up by that one. And giving it company are some of the auto names, like I said. So Mahindra & Mahindra, Maruti Suzuki, Hero MotoCorp as well as Bajaj Auto are doing well for themselves. Tata Motors too is chipping in with about an 8% gain to itself. Titan, the update may have been whatever it would have been, but the stock is up about 7%. So the market's really shrugging off that little bit of nervousness this Titan showed in the March quarter because of the lockdown. Bajaj Finance is back to winning ways, nearly 2,500 now for this one, 6.5% higher for that. And Kotak Bank and ICICI Bank too are giving it company. Frankly, it is pertinent to look at what is losing out, because almost everything else is gaining. And a couple of names that I do want to point out, one of them is Tech Mahindra, which is down about 3.5%. And Hindustan Unilever, the winner of the last few days, is seeing some profit booking. Now, is this a sign of a risk on? Don't quite know. In the morning, I thought we'll probably not have too many long positions being carried on, or short positions for that matter, into the long weekend. But it seems like we're doing that because we're trading nearly at the high point of the day. And it is the defensives which are playing on the back foot. Well, good afternoon, Devina. How's the broader market looking?
The broader market is looking well placed, Neeraj, and as the last few days would have been indicative of, the breadth of the market is also extremely positive this afternoon. We've got positive views coming in from the global equity markets as well. Dow futures, S&P 500 futures are all trading in the green right now. Marginal gains about 0.5%, but let's see how the rest of the pack does. As we all know, S&P is already into the bull territory. We're waiting for ourselves to make our way towards that marker. 20% gains from the lows would stand to be somewhere closer to 9,130 levels on the Nifty. But the broader market space, mid caps and small caps doing well. The Vix has come off a bit, about 3% under for today's session. India Vix, but levels of around 50, 51. That's where we are at since the last 2 trading sessions, I believe. Coming back to individual stocks and taking a look at what's been moving and buzzing within the broader market space, you've got pharma again today. The Nifty Pharma is up, I think, about 3.5%. Stocks within the fertilizer space as well as the specialty chemical space doing well. You've got RCF up 15.5%. You've got the likes of Container Corp, which is up 12.5%. Minda Industries 16.5% higher. Higashi Motors 15% higher. Praj Industries, Motherson Sumi, Bajaj Electrical. So a wide gamut of stocks actually doing well. Avanti Feeds also picks up pace today. Tata Motors, DVR 11% higher. Jyoti Labs, LIC Housing Finance, Lupin, Vinati Organics. Vinati Organics has not seen a 10% days in some time now, so that one is encouraging. And then you've got the likes of Grief Scotland, you've got JSPL, you've got the IDBI Bank, Sterlite Tech, all of these names doing well. 1,332 stocks advanced. 215 stocks are trading in the red, but you still have a few losers as well. So you've got a DB Realty, which is down 5%. Gayatri Projects are down 4.5%. You had some comments coming in from Noredco, asking for a package of sorts, stimulus, about $200 billion. I mean, that's a huge amount to talk about. And also the diagnostic companies, now that the Supreme Court is indicating that they want free of cost testing from private labs. That's not going to go down too well. So Thyrocare is already down about 3.8%. I think Dr. Lal was up at the session, 1.5% higher. But they've taken this back to the Apex Court to take their grievances there. So let's see what comes out from there. But keep in mind, today is also the weekly options expiry. So we're going to watch out for all of those indicators coming in from the derivative space as well. Navneet, good afternoon.
Good afternoon, Devina. Well, the cues and the weekly options expiry day are pretty much looking good. We could be off the day's high, which is about 91.11 on Nifty, but still we're comfortably holding around the mark of 9,000, though the Nifty futures are still trading at a discount of about 20 points last when I checked. And there is fresh build-up, which is visible for both today, Nifty futures as well as Nifty Bank, which has been exhibiting strength now in the last few sessions. Nifty Bank is trading around the levels of 19,559, and the futures have seen open interest build-up of about nearly 20%. You also also spoke about the volatility index. Yes, it's been coming off. I think barring yesterday, last 4 days, we've seen some cool off, and it's cooled off from those recent high levels of about 86 to now 50.2, which is a good sign. But we need to still see India Vix coming off. 50 is still elevated levels if we compare it to the historical data. Options expiry, what range? You should watch out for then in today's expiry, at least for Nifty. Couple of strikes I just want to highlight. First, the 9100 call, which has seen significant amount of writing of about 17 to 18 lakh shares as we speak, indicating maybe then expiry could just take place below that mark of 9100, and 9000 put is seeing aggressive writing of about 2200. But one positive takeaway is 9000 call today intraday has seen pretty much unwinding. In the first half, we were seeing some bit of interest build up, then index went up to levels of about 9100. The range, probably the data is telling you, could be between 8950 if we were to fall from here to 9100 on the upside. But of course, the immediate resistance remains yesterday's high of about 9131 on Nifty. Moving on to a couple of stock futures. Yes, pharma and auto stocks are the one which are doing pretty well. In fact, Nifty Pharma Index is up for the fourth straight session. Just want to highlight a few pharma stocks where good amount of OI buildup has come in. Cadila has been doing well in the last few sessions today, though the stock may not have moved too much, but there is good amount of open interest buildup of over 50%. It's also at its 52-week high. Then you've got something like Lupin, which is in focus, and the other one, which has been in focus since morning, is Cipla. So that one's seen open interest build up too, and that's trading at 52-week high. On the auto stocks, I think what's coming up on my screen is Maruti, because on the future side, there is some action seen indicating maybe at these lower levels, you are seeing some bit of long positions now coming up for Nifty, or for auto stocks particularly. And in fact, Nifty Auto Index too has been bouncing back from those lower levels. In the last 3 sessions, we have seen positive closing from the Nifty Auto Index, Neeraj.
Okay, well, we're getting in Swaroop Mohanty right now to talk about the Amphi data that has come out of about 15 or 20 minutes back. Swaroop, so good having you. Thanks much for taking the time out. These numbers clearly indicative of, well, maybe not clearly indicative, because large cap fund and multi-cap schemes in the equity side have still seen some inflows. But what do you make of the headline numbers, and what are the key takeaways according to you?
See, I think from the headline perspective, you can't ignore the flight to safety, or, the exit that has happened on the debt side across categories. Of course, there is a fair amount of nervousness amongst investors, and one can't take that away. It's probably one of the largest outflows I've seen for some time. You shouldn't read too much into the liquid data, because that's a March end thing that typically the institutions go out, and that should be restored. But the others, you cannot sort of not mention that. But from an equity perspective, I think it would be the highlight over the last 24 months, I would say, in a month which is, again, a truncated month from a transaction perspective, because half the month practically was on a lockdown. And then you see this kind of a flow, multi-cap getting money, large cap getting money, mid-caps also getting money. Incidentally, people not shying away a bit from small caps, which is good to see, because the large call from the industry has been more large cap, multi-cap than anything. But what surprised me was the amount of money which has come into the focus fund. I need to check if there was one NFO or anything. But if it is not, then it's a great inflow into the focus fund category. And contrary to what I had told you last month, I think I'm happy that the ELSS has got its money last month. But yes, there has been a fair amount of outflow on the arbitrage side, which is also pretty significant. So broadly, that is how it is. And the asset hybrid category also remains in that outflow mode.
Yeah. So, Swaroop, how does this augur? I mean, I'm guessing the risk off mode must clearly be on right now. A lot of people who've come on the mutual fund show, the queries that we receive also talk about whether they should shift to the fixed income schemes, since debt schemes are also looking attractive considering the lower trajectory of interest rates, etc. Do you reckon that things could turn a bit choppy for flows, and therefore the EMs managed by schemes at large in general over the course of the next couple of months? How has April shaped up thus far?
April so far in this truncated sort of transaction environment is, for us, has been as usual, business as usual. I'm so happy to see the inflows continuing though the physical side is still not getting accepted in the market. But from that perspective, it's a full month, then we will be tested this month. Whether the digitalization of the entire industry is up to the mark or not is something which will be tested this month. But so far, so good. But if you were to reflect on last month's data and so much of talking, especially people like you who do the shows and the investor education actually playing out, people in India through mutual funds are finding value in the market, and these are great times for fund managers to get money, and it's so good to see investors coming and reward the fund managers at a time when they need money. But yes, the debt side looks a little choppy at this moment. While you've said these are great times to buy debt too, but I suspect that choppiness will play out this month. I don't see it getting restored. That's my personal opinion. I may be wrong on that. But equity, I think, will hold good. And when the SIP numbers come out, I'm sticking my neck out on this one, saying that the SIP numbers will also hold good. People are recognizing the fact that they are getting units at 30% lower than what they were getting just a month ago. And in fact, we were positive flows in SIP also last month. So it's good to see that behavior.
Just one last, Sarup, just one last question on this conversation. The liquid fund picture, how have you looked at that? Because the last 2 months, they've looked slightly choppy. Outflows last month, outflows this month as well. Is it all a factor of what corporates have had to do in these slightly illiquid times? And do you think that will change?
No, if you see, coincidentally, there has been an uptake in the overnight category. So a lot of money where the risk profiles have not matched, or the entire MTM part of the liquid fund, which has played out last month a bit, is playing into these numbers too, as you're rightly pointing out. Not all of it, I would suspect, is March outflow. But the other side is we've seen around 26 or 27,000 crores positive in overnight. Typically, that should have also gone negative from an institutional outflow perspective. So I would suspect some amount of shift from liquid fund in the rightful risk profiling now shifting to overnight, and that is something which we had anticipated that it will play out. Now, from an asset allocation at the shorter end also, we are seeing that the lowest risk people are now shifting to the overnight fund, and people are investing as per the risk profile. But I do agree that not all the shift could be institutional in nature.
Okay, Sarup, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. Well, it'll be interesting to see if indeed the SIP flows stay as it is. Well, it's always good to buy in a downturn, and hopefully people don't alter their investment plans. But yeah, do consult your financial advisor before you take any calls on how to continue, how much to step up, how much to scale down. I think the financial advisor would be the best person to kind of help you out with that. But let's get in our experts on board to talk about the markets. Last 51 minutes of trade left before the long weekend begins, and the markets are on a superb footing right now. Mohit Gaba joins in. It's been a while, but he joins in right now with his thoughts. Mohit, good having you. Thanks for joining in. Neeraj here, good afternoon. What's your sense, Mohit? We are going into the long weekend pretty strong. If you were long, or if you wanted to take a position right now, would you take one and carry it home?
Well, thank you for having me, Neeraj. It's been a while indeed. I just want to kind of take a step back and just mention that, from the highs of 12,430, we've kind of fallen about 4,900 points. And right now, this seems like a good up move, but let's just, be clear that this is perhaps a bear market rally. And with rallies like that, you've got to be a little bit skeptical, you've got to be a little bit paranoid, I'd say, and kind of take profits really quickly. So right now, the way we are, I'd have liked if we had kind of closed above levels of 9130, which is yesterday's high, which would tell me that, we're continuing this up move, especially since we had a second half fall in the market yesterday, but we're still within yesterday's range. So, no doubt the trajectory is up, and you've got to buy in this market from a trader's point of view. However, I'm hesitant and skeptical, take smaller positions than you would usually, and you can trade on the long side, especially since we've held ground today and we have not really given up, the gains which we had at open.
It's a pretty strong move for the end of the week as well. So, if people are ready to be a bit more risk on ahead of the long weekend. Brijesh Singh of Stock Access is also joining in right now in the discussion. Brijesh, good afternoon to you. Let's get in a sense from you. I mean, we had anticipated a positive open, keeping and tracking what the SGX did. But if we close with these gains above 9,000, which again is another crucial marker, what lies ahead? We're missing out on Friday's trade, but for Monday, would you recommend taking home long position? Rajesh? All right, I don't think Brajesh can hear me. But Mohit, let me just, get in some stock ideas from you. So while you've got a call on the index itself, individual stocks in the broader market space has been surprisingly more positive. The breadth of the market has improved in the last few days. Would it mean that you could now look at individual stocks and go long from a slightly positional standpoint?
If I am going to go long from slightly positional standpoint, I'd rather look at, the large caps and the stronger stocks. Within that basket, I like ITC. So I have kind of given a long call in ITC. You can have a stop loss at levels of 180 and I have targets of 192. But ITC can very well, go higher towards levels of 200 also, especially if we continue to move higher, more towards levels of 10,000 zones on the index. So if that does happen, ITC can go a lot higher. So the second stock I actually like is Bharti Airtel. We've kind of not seen a big down move on this, given the other stocks that have fallen in the market, and this has kind of held ground. So I like Bharti Airtel. We can continue to go long on Bharti Airtel with a stop loss at levels of 472 and targets of 495 to 500 zones could be achievable. So these two stocks are really good in terms of the long side. Another stock that caught my eye today, which has seen a pretty strong up move is Concor. And even this can move higher towards levels of 400, 410 in the coming days, especially given the momentum on the upside. And we need to have a deeper stop levels of maybe 365 on Concor.
Three stocks there, ITC, Bharti, and Concor. Watch out for all of these names. I think Brajesh Singh is back with us. Brajesh, if you can hear me now, I want your take on the indices, and would you carry home some longs?
Good afternoon, Devin. I'll say definitely right now the trend looks a little bit positive regarding with the taking home long has been concerned, definitely, but always I would be saying that always use a strict stop loss, and only thing to be wondered that there should not be a gap up opening or gap down opening. Now, regarding with the some important level which I would be discussing with the Nifty point of view has been that Nifty made a low of 775.11, and after that we have seen a pullback, and 1700 to 8000 was on a downside support, followed by 8500 to 8600 on the higher side. So Nifty was been consolidating in this range, and after that we have seen Nifty breaking out from this range and moved up on the higher side. 9200 mark is a psychological resistance level which I would be watching very keenly. Whereas downside has been concerned, 8800 is a level which I would be watching that should not be broken on a downside for the momentum to continue on the higher side. So 8800 would be acting as a support which I would be looking very keenly, whereas 9200 would be the first resistance zone which I would be watching as a minor resistance. If we are giving closing around 9200, then another 300 point rally can be seen, which from a hourly as well as from a daily chart point of view, it looked like chances are that we might break 9200 in coming day, and we might shift towards the higher side. So Nifty is looking long. Regarding with the stock specific has been concerned, only one call has been looking positive from my end. One can play on a long side, that is C8. So when I posted that call, that time it was quoting at 778. Now it's somewhere around 795. It's been quoting. Present rate can be used to go long. We can modify the stop loss. Stop loss which I mentioned was 758. We can modify it to 775. The target which I was looking was 810. We can modify that into 825. So C8 is looking bullish on a chart. So for a couple of days, it's been concerned.
Okay, that's the view coming in on the indices from our technical experts, and it's been a good week. In fact, Nifty is up about 11% for the week, and you've got Nifty Bank, which is up about 13% for the week. Remember, and the week consists of just about 3 trading sessions. I think it's going to be the best week that we've seen since 2009 as well. But nevertheless, there are a lot of stocks moving around. I just want to take views on a couple of other stocks as well. So Motherson Sumi is, by the way, at day's high. You've got Bajaj Finance also surging to day's high. That's up about 8.5 to 9%. And of course, auto stocks we've been highlighting. Maruti is up about 10 to 10.5%. On the future side, we highlighted open interest has surged there as as well. Mohit, hi. Would you take a bet on Maruti at levels of 51.90? Do you think the stock has bottomed out, or for that matter, anything else in the auto pack which has been buzzing in the last 3 sessions?
Navneet, as of now, I do maintain that most of these stocks are in bear market rallies. So yeah, you can certainly take longs on these because they are showing strong momentum on the upside. Talking about Maruti in specific, you can go long here. You need to have a tighter stop of levels of perhaps 5100, and you could see targets of maybe even 54 to 5500 if this up move does continue. Likewise, even in Aisha Motors, this does look okay and can continue to hold higher towards levels of 14,000, 14,500. Bajaj Finance is one that has looked good, given today's up move, and this is kind of had a late up move. So we can go long on Bajaj Finance with a stop loss of perhaps 2480, and you can have targets of maybe 2650, 2700 also in the coming days. So these are few stocks that you can play the upside momentum in, given the momentum of the market, and especially if the index continues to move higher.
I think the key monitorable today will be if we can close above the mark of 9,000. Remember, we've been crossing that mark. This is the third session in the last 1 month that we've tried crossing the 9,000 level, but we've never been able to close above it. So let's monitor that. And after a while, I think we're slated to close above the 20 DMA as well on Nifty. Brijesh, hi. The other pocket which became active, I think intraday yesterday, was a couple of NBFCs. So right now also you've got Cholamandalam Investment, which is trading with gains of 15%. Shriram has done pretty well. You've got something like LIC Housing also perking up in trade. That's gained about 12%. Anything within this NBFC space, Cholamandalam, Motherson Sumi, they're all beaten down counters, but would you take a bet on the upside?
See, in that I was been looking LIC, Navneet, and it might be a BTST call also. The stock is eager to break its previous swing high of 253. Now it's been quoting at 252. If so, for short-term bet is been concerned, 239 would be the stop loss, whereas on the target is been concerned, one can play for 275. For the BTST is been concerned, keep a strict stop loss of 248 and play for the target of 260.
Okay, so watch out for these stocks and let's see where the closing comes about. But let's also bring in a fundamental guest in the show and get some funda views going. We've got Dipin Mehta, who's a director at Elixir Equities, who's joining us on the show now. Hi, Dipin. Good afternoon, and thanks a lot for joining us. A very simple question, Dipin. We've been talking to a lot of market experts, and they're trying to say that don't try to catch the bottom. It's okay if you enter the market even 15%, 20% higher. If we were to look at the lows of Nifty, we're almost recovered 19 to 20% from those lows that we've witnessed, I guess, in the last few weeks. Do you think now is the right time for someone to deploy money into markets? If yes, which are the pockets you're looking at?
First of all, one should not assume that the 7,500 was the actual bottom. Something like this played out in earlier crises in 2000 also and 2008 also, where the market fell swiftly over a month or 45 days and only to retest those bottoms a few months later. The bottom in a crisis situation like this is very difficult and one shouldn't indulge in it. Having said that, with the market having rallied already 80-90% or so, any fresh purchases would clearly depend upon the individual's cash position in their portfolio. And this question has been asked many times to us, and our simple submission is that if you only have 15-20% of your portfolio to invest, then just hold on and once you are sure that the bull market has resumed. But if you have 50-60% cash in your portfolio and steady cash flows thereafter, then I think you can do a systematic weekly investment over the next, say, 15 or 20 weeks or so, and invest an equal amount, because trying to time the market in normal conditions is extremely difficult, and given the kind of crisis we are in, it's foolhardy to try and time the market. So I think investing or not investing all depends upon the kind of cash in the portfolio. And coming to stock specific, I think this is a great time to buy good quality stocks and Nifty stocks. You can pick the leaders in every field. For technology, you can look at TCS, HCL Tech, banking, HDFC and Kotak, GHUL, Netflix, Godrej Consumer, and telecom looks quite interesting with Bharti Airtel. Within the pharma, one needs to perhaps buy a basket of stocks like, say, Sun, Lupin, Cipla. So I think that by and large, good quality stocks in most industries should give similar returns over the next 6 to 12 months.
Good afternoon, Neeraj here. I remember our conversation the last time when you mentioned that you were fully invested as is going into this session as well. So now my question is, are there pockets which to your mind, because the business model would potentially change or the valuations have become very reasonable or otherwise, are looking attractive and you are happy to switch out of something into those? Are there pockets that are looking as attractive?
The only thing what is unattractive is airlines and entertainment, that is exhibition companies or some of the quick service restaurants. Other than that, I think everything will do as well or as badly once there is recovery. Maybe you could add automobiles also to that list because they would have a slightly longer tail when it comes to recovery. But I think the larger sectors, be it FMCG, pharma, banking, about the other consumption stocks, building materials, I think those should be fine. So should healthcare. So I'm not trying to get a very stock specific. I'm just trying to buy good quality stocks, which are like once in a decade opportunity that you can get to buy. Like HDFC Bank, the way it has cracked, although it's rallied from its bottom, but still available at historic at below average valuation ratio. So I'm looking for those kind of stories rather than trying to do sector wise. Or take, for example, Bharti Airtel. And once this particular problem is over, then we will go back to the whole investment theme of consolidation in telecom. And Bharti Airtel would certainly benefit from that. Within the pharma, we like Indian pharma companies like, say, Alchem Laboratories, or for that matter, something like Divi's Laboratories, which is very strong in manufacturing and superior business model. So my thinking right now is to buy companies which I've always wanted to buy, but couldn't buy because psychologically they were too expensive or a price to earning multiple days.
Okay. I heard you mention that it did not necessarily be true that the recent lows would be the actual lows. So there's a bit of a bounce, and financials, which were the fulcrum of selling in the drop, have seen quite a dramatic bounce back, as have autos. Would you reckon that if we were indeed to head lower from where we are right now, those are the pockets that will get shunted out first from the portfolios and therefore we'll see selling?
Yeah, I think that the concentrated bets were in the banking sector before the coronavirus erupted. And I think that whenever anybody wants to create liquidity, because they have a large exposure to banks, NBFCs, those will be targeted first to sell. And at least there is some value rather than some of the other stocks which may have corrected with caps, which may have corrected by 70-80% or so. So from that extent, those companies are certainly vulnerable. But, I think we reached a stage now where everything is kind of, the valuations or whatever, the risk-reward profile is very much similar across the board. So if something is expensive like, say, Nestle or a HUL, then its risk-reward is favoring you. At the same time, a beaten-down stock also, 400-500 crores market capitalization, if it has corrected 20%, then the risk-reward also is similar, that you could lose 50-20% but gain maybe 50% or so. So as I said, I think that apart from going for the bluest of blue chips, there's not really much to look at the market at this point of time. Also, I just want to add that, we'll have a very brutal earnings season, which may be spiked with a lot of volatility stock-wise. And, a lot of surprises may come over there. Accidents may take place over there. And you could be even positively surprised by companies who may not be impacted as much as the street is getting impacted. So from that point of view, I want to leave some powder dry for the earnings season so one can quickly act depending upon what companies are paying for. See, right now we're just shooting in the dark when it comes to earnings and valuation because we don't know how the economy will play out once the lockdown is lifted. So that is also some of the ideas which come to mind at this point of time.
Dipan, and lots more to talk to you, but I actually want to get your opinion on the kind of rescue or relief the real estate industry is vying for. But before that, just getting you another market voice then. Andrew Holland of Abendus Capital believes that cash flow mismatches and working capital issues will create roadblocks for companies as the coronavirus curve flattens and regular business starts to resume. Speaking to us early in the morning, Holland said, says a pickup in demand is at least a couple of months away.
See, first of all, we have to get the flattening of the virus curve, and that's what the first stage is. Now people are starting to look beyond that, and the narrative changes about when countries and companies can start going back to work. And I think that's where I think the problems might really come up, is that first of all, it's going to be in a phased manner. It's not just going to be open up and everyone can go back to work, because there's still a lot of problems and cases in Europe and the US. Secondly is that, are we going to change our habits so quickly? Unless there's a vaccine, I still think people are going to not spend as much, yes, on essentials and maybe some other goods. But I don't think, you're going to be wanting to go out into public spaces where there's many, many people. So I think it's going to be not a V-shaped recovery. You will get a little bounce, obviously, initially when people can actually get out of the house. But thereafter, I think it's going to be a U-curve in terms of the recovery, and that's going to be painful. And I don't think the market's baking that point in yet. So let's look at it. The US has given $2 trillion package. That's 10% of GDP. And everyone's saying that second quarter GDP is likely to be anywhere between 20 to 30% down. So they'll have to give more packages. So the problem remains is that, yes, for the next 3 months you might be okay, but what happens after that? The cash flow problems for small and medium-sized businesses just don't go away. And I think that's really what the market will have to start baking in at some point.
In light of all of these factors, excitement around such bear market rallies, are they warranted, or does one just sit back, hold on to some amount of cash when there is something that you can put your finger on and say, okay, now I know for sure things are changing. That's the time I start investing.
I think that would be a good strategy, because what you have basically is that forecasts are all over the place. So until we start to see countries and companies getting back to work and how quickly they can build up capacity, and then the demand. So let me give you an idea of I was kind of saying that there's a V-shape or U-shape recovery. So a German institute came out yesterday and said, we expect GDP to fall by nearly 10% in Germany, and then recover. So by the end of the year, it's down by -4. And then in terms of what they're saying for 2021 is that there's a recovery of 5%. So basically, you've got 2 years of flat growth, even if you take that U-shaped recovery. So that's going to be very painful for industries. So until we get to the point where we can start seeing what the demand is like, then we can start looking at fundamentals of where we think companies will be, where industries will be, and what the right kind of PE ratios or price to book ratios we should be looking at. So until then, I think sitting on the sidelines is probably just a safe thing to do. I don't think there's any reason to get so optimistic, unless obviously a vaccine comes along and that would change the whole picture again. But that's not likely till 2021.
Where exactly are you seeing the biggest chunk of the leadership coming from?
So, the question, and you've asked the good question, is, have we hit bottom? And the answer is I don't know. What we're looking for is 3 factors which would make us feel, that the stability in the market is there for us to look at fundamentals. First would be, and we talked about it before, would be that, the flattening of the curve in terms of new cases globally. 2 would be then the narrative moving towards getting back to work and what that would mean. And 3, the Vix, the Volatility Index in the US, was around 80. It's now around 43. If that kind of heads towards 20, then I think, we'd feel more secure that the markets are now baked in a lot of the expectations or the near-term volatility, and you can step back in the market. But thereafter, you have to then see how quickly, and I'm talking about India now, how quickly we're going to start to move towards opening up either states or industries, so they can start producing goods and services, and then how quickly the consumer is going to start spending. I think that's going to be a good 6 to 9 month kind of battle. I think for the consumer to really want to step out and really buy something. Let's not forget that whilst we're all talking about getting back to work, a lot of people will have been either laid off or will still feeling insecure about their jobs going forward. So I think people will tend to save initially. I know we've not been going out, so we've been doing some saving, so we have some extra spending power, which is why I'm saying that initially you might get a peak in spending, then I think we'll start saving and maybe put more disposable income towards more health type issues.
All right, and one of those factors that everyone's been talking about, and that's India Vix, that has definitely come off, but there's still more scope to go on that side. But also keep in mind, today is a very active day, so we get in Sharad Dubey is joining us right now with the list of Fab 4 stocks for the afternoon. Sharad, good afternoon.
Good afternoon, Devina. The first stock I've picked up is Astron Paper and Board. The stock is hitting the upper circuit of 10%. It's up. Well, the company has received its permission from the government of Gujarat, to commence the production of one of its facilities in Bhuj, and also its wholly owned arm has also received permission to commence its operations. This is the third straight day of the gains for the stock, and it has risen by more than 21%. Up next is from the pharma space. It's buzzing. It's Lupin. The stock is up more than 11%. As we have seen fresh longs are being seen with a high over interest of almost 36%. The volumes also high, almost 5 times its 20-day average, and the stock has jumped highest in 18 weeks. So the pharma space is actually in focus today as US FDA approvals are coming fast. Up next is Ashoka Buildcon. The stock is at the upper circuit of 20%, and it's the top gainer in the Nifty 500 index. The stock has risen by more than 33% in the last 5 sessions. And up next, and the last stock of the day, is from the reality space, Kolte Party Developers. The stock is up more than 6.4% after the company stated in its press release that it has entered into an agreement with UK-based real estate developer Planet Smart City. So basically, this is for a strategic land monetization of a portion of Life Republic in Pune for almost 91 crore rupees. Well, this land parcel will be jointly developed by both the companies on a profit-sharing basis. Back to you.
Sharad, thank you so much for that. So those are the Fab 4 stocks of the day. Keep an eye out on them. I want to quickly address a few queries that we've been getting as well. A lot of requests coming in. And the first one comes in from Adesh Kamble. He wants to know the reason for the weakness in Infosys. Not just Infosys, the IT pack as a whole, and a lot of comments coming about how this year could be a washout in terms of growth numbers for IT. Dipan, while we're looking at the rupee being a tailwind, growth is completely out of the window now for IT for some time.
Yeah, that's right. They'll face the full brunt of the global economic slowdown, which will be worse than what India will face, because we'll be amongst the first countries to get back to normalcy rather than Europe and US, which are the key markets for IT. So I would be very skeptical on having a large exposure to software companies. In any case, growth was slowing down before this coronavirus, the global economy. So I think at an opportune time, one should look at lower exposure for IT companies. Maybe a few exceptions would be companies like HCL Tech or Tata Elxsi, which have a slightly differentiated business model. But I think for a large number of IT companies, they'll have major challenges in terms of getting new projects and more furloughs being asked by their clients and further pricing pressure as well. So I think that's one sector after aviation and hospitality which will be most negatively impacted once we have the first signs of normalcy coming back.
Okay, so IT is a no-go, at least for now. Aside from that, we've got the other pocket, and this seems to be a space where most have said that this could be a pocket where the next leadership could come out from, and that's the energy space, energy stocks. And this query comes in from Apurva Anand. I think GAIL, IOC, these are the kind of names he's pursuing. But what's your take, Dipan, on what is the likely road ahead for energy stocks, and if you have a view on either GAIL or some of the oil marketing companies?
I think they'll move in tandem with the market. I don't see any reason for them to exceptionally perform well. End of the day, they are pass-through entities. So if lower oil prices are there, then they'll pass it on. It's not that that permanently benefits their operating profit margins. And on the contrary, because of what is happening globally, the pressure on refining margins will sustain for many more quarters. So I'm not that positive on oil marketing companies also for that matter. And as I said earlier, I think that, looking for blue chips outside of the stressed out industries. Another investment theme which investors could look at, which was quite popular before coronavirus, was this manufacturing exports out of India, as MNC companies look for diversifying their supply chain away from China, and we are benefiting from that, especially companies engaged in specialty chemicals, home textiles, engineering products, and even automobile ancillaries. So I think that particular investment theme will again get favor with investors once the entire global economy starts to operate again at whatever it's say 80-90% of its capacity utilization. Because one lesson that large companies with global presence have realized is that they need to have a very diversified supply base. So keeping that in mind, I think, and what happened in China, there are bound to be some repercussions for Chinese exporters. And India and some of the other Asian companies should benefit.
Dipan, we'll let you go on that note. Thank you very much for joining us and being with us this afternoon. I just have one last query coming in from Lokik Parshurami. Outlook on VIP industries, and also is it a good time to look at the auto space? Mohit, why don't you take this? I mean, when we're looking at auto, you're seeing some, a good activity coming in for counters like Maruti today. But what about the two-wheeler space, and any view on VIP?
Well, as far as the auto space goes, this space is moving up in trade today, and pretty broad-based because they have been beaten down pretty bad. So as far as even the two-wheeler space of Bajaj Auto looks all right and can move higher in the coming days. We're very close to breaking up towards levels of 9130, which tells me that the Nifty is kind of odds are we'll move higher in the coming sessions next week, perhaps towards even levels of 94, 9500. And it's good to stick with momentum, especially banking and auto, because they have been beaten down pretty badly. Even with the likes of Motherson Sumi, which have seen a really strong up move in trade today, this could perhaps head higher towards levels of 70, etc. But I would stick with the two-wheelers because they are kind of showing good traction, better traction compared to the other auto names. Hero Motor also can continue to move higher towards levels of 2050. A stop here would be levels of perhaps 1960 on Hero Motor. I would just like to you said VIP industries, let's just go there first. As far as VIP industries go, it's in a pretty bad bear market. We have seen uptick towards the last couple of sessions, but I wouldn't really want to go long here. I think it will kind of build base, or if we move low on the index, perhaps in the next month or so, then this can continue to move lower. So I'd kind of want to avoid VIP industries for now. It could perhaps move lower. But just want to take a minute here and talk about one sector, that's the Pharma Index. As of yesterday, the Nifty Pharma Index has bottomed out, and we've kind of moved higher on a weekly basis. So from that point of view, the pharma stocks are looking all right. The one stock that I want to talk about in particular is Sun Pharma. This is one stock that has kind of, for me, bottomed out. I know we've seen a 50% up move from all-time lows, but seeing this stock in move the last couple of weeks, I think we've bottomed out. And if someone wants to really buy it from a longer term point of view for maybe at least the next 24 to 30 months, today would be a good entry point. You could perhaps see it move again down low in the next few weeks, but I think that you can buy this on dips, and this can very easily move towards levels of perhaps even 600 in the coming 24 to 30 months. So Sun Pharma is looking from a buy and hold, looking good from a buy and hold kind of point of view.
Okay, that's the view coming in on a lot of these pharma stocks. I just want to shift focus back to markets, guys. And I think the expiry play is now playing out in last half an hour. We're almost at the high point of the day. Remember, I was mentioning watch out for yesterday's high of 91.31. We've not been able to touch that, but we're trading pretty close to that. 91.25 is, by the way, today's high. Nifty is right now at levels of 91.20. Futures, however, market, they've been trading at a discount of about closer to 20-21 points. And Nifty Bank is up 5%. So once again, it's inching closer to the mark of 20,000, which we've already touched this week. But from those higher levels, I think it was a short covering bounce intraday that we had seen. And then once again, the index had slipped from those higher levels. One stock among the Nifty constituents, which is up 35%, I guess, or maybe 34% for the week, and is today's gainer as well. Mahindra and Mahindra, I know we've spoken about auto companies, but Brijesh Shah, can you give us the technical check here? It's up 14-15% today. For the week, it's gone up 30-35%. If somebody is holding long position here, it's an extended weekend. Would you advise to book profits here, or one can, continue to hold the position on the long side?
From 244, the stock has been moved up, and in today's session, the volume as well as the UI data have been showing me the signs of more strength would be coming up. So I would not be suggesting to go to book a profit in it, rather than holding on to the position, or even for the fresh position is being concerned. Suppose someone wants to take a fresh position at right now, also one can take. Two important support levels are there. One is 350, and another level to watch would be very keenly would be somewhere around 362. So keeping a stop loss of 362, one can take a long position in it, and on the higher side has been concerned 390 is the resistance I would be looking for. But the major resistance lies somewhere around 410. So chances are that in coming days we might see Mahindra and Mahindra touching a level of 410.
Okay, that's the technical view. Brijesh, apologies for misspelling your surname. But the other stock that's been in focus today is Titan Company, which is up 10%. And now with the move today, maybe the market mood is also buoyant, but it feels like the market has already priced in the sort of updates, quarter four updates they had given last evening. Let's get a check on the stock. And first, let me go across to Gurmeet Chadha, CEO and co-founder of Complete Circle Consultants, who joins us. Gurmeet, they've missed the guidance. They've been cutting down their revenue guidance on the jewelry business, which is their main business, contributes nearly 80% to their top line. So far, they've missed it. And if one were to now look at valuations, of course, it's always been an expensive stock. EPS for FY19 was somewhere about 15.5. Now, estimates for this year is 16. And a lot of brokerage notes, I was reading, Gurmeet, I think for FY21 also, analysts are only factoring at 16 rupees. So are we saying there will be no earnings growth for a company like Titan in FY21, and still we're okay giving it, ascribing multiples of 50-55 times?
So I think, Navneet, it's a little early to say that there will be no earning growth this year. I think things are very fluid and changing very dynamically. If you see the breakup, and you rightly pointed out, the wedding collection was doing very well for them. The impact also this quarter, would actually cover up things, because till February things were pretty okay. And that's why the jewelry business is down about 5%. So my sense is, I think obviously next quarter looks to be I won't say a washout, but a very, very subdued quarter. So it's early to say, and you are right. I think despite the corrections, the valuations still remain, pretty good. I think what we need to watch out for is how the breakup of the business is, right? So if you see the jewelry business typically does, 5,000, 6,000 crores of turnover, and the watches segment is more like 500, 600 crores, and now the other segments which they have added would be another similar quantity. So effectively 80% of the business gets impacted. The only saving grace is that they have this golden harvest scheme, which is very similar to the SIP scheme they have, but they get very steady flows where you pay 11 installments and the 10th installment is free. So that could give them some protection, but I would like to wait it out. It's not a good idea right now to take a view on business like Titan right now, knowing that the lockdown would get extended at least for a couple of months, if not the entire quarter.
The view, Gurmeet, is also avoid discretionaries, maybe at least for the next 3 to 6 months till the time normalcy kicks in for the economy. But Gurmeet, just staying on with the same space, we also had update coming in from Marico, quarterly update, where they said the volume will be lower this time around. Just overall, what a sense here, since FMCG companies have been bucking the trend in the last 1 month. If one were to look at the earnings estimate, because of the supply disruption due to lockdown, volume growth will be impacted. A lot of these companies, they've come out and they've cut down prices. So we're also not expecting any sort of price-led growth to take place. So do you think in the stocks which are moving, it's only about price expansion right now and not about earnings?
If you see Marico, since we started with that, the coconut oil is almost 45-50% of the revenue, where the impact is neutral. So it's not very positive. It's not very neutral. I think the grooming and the VAHO segment is where the impact would be. Even Saffola continues to do well. So I would not be too positive or negative on Marico. Maybe neutral, and maybe you can wait for more price correction. Look at segments where you think the growth would be more. It's very important to closely look at the portfolio. So something like a Britannia, despite some milk inflation, despite disruptions, the biscuits and the cookie segment is 75%. You have bread and rusk and the other segments, which is 10%, and dairy is another 5%. So, 90% of your portfolio will work and do pretty well. And FMCG is one of the defensive plays right now. Reason lever has done well, and if you see lever's portfolio, if you see soaps, if you see the fabric wash, the tea, the shampoo, oral care, all portfolios are doing well, except for that, the ice cream and the small portfolio, which is just 2-3%. So it's very important to look at the portfolio more closely in depth in terms of how the portfolio looks like. To me, incrementally in this space, and if I were to take FMCG and maybe broaden the definition, I think Dabur, doing pretty well. Combination of OTCs, hair care, personal care segments, supplements, all juices, all doing pretty well. They have almost 15 brands with 100 crore plus turnover. They have a great rural reach. So 60% of the volumes and 45% of the revenue comes from rural. And my sense is the lockdown would gradually get increased. And I think the rural areas you'll probably see more restrictions being lifted because there's a harvesting season and obviously the outbreak is lesser there. So Dabur, Britannia, and Varun Beverages, I think they had a very good Q3 despite, Q3 being the weakest quarter for any beverage company, and now you're beginning summers, their product mix is quite good. The juice thing is picking up very well. The acquired territories from South and West should start now adding up. The capex and everything is behind. So Britannia, Dabur, and Varun Beverages for me from the FMCG packs.
Well, FMCG is though not the star of the day today. I mean, this is a rock solid performance as we head to the close, 4.25%. And as we've established a number of times today, we trending and going in almost at the high point of the day. It's actually pretty good news. Gurmeet, a quick response on Bajaj Finance, Gurmeet. Is this bounce back kind of pricing in the near term valuation mismatches that had happened at 2100?
I think so, Neeraj. I would be tempted to think so. But as I said, we'll have to wait a little while, on Bajaj Finance, because as I said, the mix of the loan book is very important. My view is that if you see the banks which have higher credit quality corporate loans, higher mix of secured home loans, better credit underwriting standards on personal loans, I think we'll tend to do better. And here it's about relative. It's not about only valuations, because when there is a fear, you also need to look at where I can feel also better, as an investor. And the fact that a private bank would have a much stronger liability franchise. So, a higher CASA book for an HDFC, ICICI, a higher LCR, the capital adequacy ratio being, ICICI being 15%, SBI is almost capital ratio being 12, but, plenty of liquidity. So, relatively, I would think private banks right now make more sense, because right now the objective is to also preserve capital and ensure that you feel good about your investments. It's a very important part of behavioral finance. But at that price point you are saying, I think any correction in Bajaj should be lapped up. I think the concern on the unsecured loan in my personal view looks a little overdone from a stock price performance. But relatively, I would pick private banks more right now if I were to put money to work, and be a little more patient with the NBFCs for maybe a couple of weeks more.
Gurmeet inadvertently answered my question. What I was trying to ask was that at 2,600 or thereabouts, is Bajaj Finance baking in some of the valuation mismatches that people thought were ripe at 2,100? Everybody said it's so undervalued, go out and buy. Now it is 2,600, so maybe that game has probably played out. But maybe a question or more too, but it's time to get in some closing strategies from our experts. Brijesh, I'll come to you first. If you had to bet on one stock as a closing strategy, it is the long weekend, but would you take a chance? Which one would that be?
Like I said, I'll go with the LIC. Right now, stock has been quoting at 253, keeping a stop loss at 248, play for the target of 262 to 65.
Mohit, you gave in one idea a little while back, but if you had to take in one closing strategy, which one would that be?
I want to reiterate ITC. It's still looking good in the charts. It's held up well in trade, and this can very easily head higher towards levels of maybe 192 to 195. Stop of 180, but I also want to reiterate Bharti Airtel. Both these stocks are holding up pretty strong in trade, and I like the chart structures of Bharti Airtel. So this also can head higher in the coming days to levels of maybe 500 to 505.
Losers are only those, at least amongst the popular names, the losers are the ones which are those labs wherein the private testing is now being made free. I don't know how much of a business impact it will have really. It may actually not, because there might not be enough tests that might be done there. But in just those stocks have come off. Balram Puccini's come off a little bit after a mammoth run. And of course, HUL continues to grind lower as well. So that one is under a bit of a cloud. Gurmeet, just quick thoughts. I don't know if you've spoken about the auto comps already, but the auto ancillaries too are up and about. Is this more a dead cat bounce? The Mothersons, Minda Corps, Igarshis of the world?
I think obviously looked a little bit of selling was overdone. I think Maruti at 4,000 and Bajaj Auto at 1,800 levels looked a little overdone to me. And I've said this earlier. I think the mobility preferences will change big time. At least in the near term over 12 months. And I think it's important again to look at who is more when you look at auto. I think the best time to probably buy auto would be when the lockdown gradually starts. Either gets eased or gradually starts getting it. That's a better way to look at it. Now, if you look at, for example, two-wheelers, Bajaj Auto, if you see, while obviously right now there's a big disruption, but the overall mix of 12 lakh units has about 5.5 lakh units of exports. You also have about 1.8 lakh units of three-wheelers. Their EIS technology, they are far better BS6 ready in my view than others. I was seeing their electronic injection system technology. Their price is about 6,500 per unit, which is indigenously developed, versus about 7,500 to 7,800 for Hero and TVS. So I think once the cloud gets cleared and things settle, I think the likes of Bajaj, Maruti will start, giving you, and mind you, Maruti is corrected from 10,000 to 4,000 and now back at 5,000. So the pain, in my view, an auto has had a bad 2019. So the correction in auto stocks was about 60% versus the 30-35% correction in the benchmark. So some places I think the pain to a large extent was in the price, but we were to be a little slow on auto right now. Just wait for restrictions to get lifted, and then I'm in regular touch with a couple of my clients are very large dealers for Maruti and Bajaj Auto, and in regular touch with them. Things are quite bad as we speak right now. Yes.
Yeah, indeed they are, and we've heard that from most of the executives at these auto companies, that it is a stress period. Gurmeet, I wanted to ask you, particularly from a retail standpoint, you have seen a complete washout of a month. It's going to take some time before people start entering shopping malls and go to a Massimo Dutti or go to West Side to buy clothes for themselves. So if you're getting my drift, I'm going towards trend. And, the stock right now in Q3 had a phenomenal run. You saw the same store sales growing about 12%, but that was Q3. Q4 is definitely going to get dented, which is going to have its own impact on the entire year's financials. But from a level of 400, sub 400, it actually managed to bounce back, but flattened out now. Would you be a buyer in trend? And also another one is Polycab. Would you be a buyer in Polycab?
No, not really. You see, the reason is that, if I were to extend this a little further, even an HUL making all-time highs and retail, I think there probably the market is giving you discounting things that only these things are going to work. People will only buy, groceries and do retailing, and if there are no houses being built, how would Polycab do well? If the construction activity comes to a standstill? My personal view is right now one should just stay put, and I keep comparing this with the cricket analogy that it's that last session of the test match where the ball is darting around. You just need to hang in there. Just wait for your opportunities to come. The market gave you opportunities, 4-5 days back when you got, a Bajaj Finance at 2,000 and HDFC Bank sub 800. I think wait for the opportunities. For right now, there's no point, trying to preempt what is going to open first, and especially cases where there is a mad run. Even look at pharma stocks. I think people have made these mistakes with HEG and Graphites India of the world by following a certain trend that, everybody will get approval, most plants will get the import alerts reduced. So don't chase momentum right now. Anything which is just bounced by 20-30% doesn't mean the pain is over. And just hang on there. Just wait for your opportunities to come by, and happy staying in cash for some time. The debt market continues to still give you, HDFC raised 3-year bond at 7.2%. So you're getting the bluest of the companies giving you 7.5-8% kind of yield for a 2-3 year period. So just stay put for some time and wait for the opportunities to come.
Yes, with Trent, a quick answer. Trent also you will not dabble into?
No Trent, no Avenue Supermart for now. I would right now only be focused on in FMCG, Britannia, Dabur, and Varun Beverages in terms of our buying list right now.
Okay, let's start wrapping up the markets, and we're closing well, 5% higher for the Nifty Bank and 4% apiece for the Nifty and the Sensex. So it's turned out to be a rather good afternoon of trade, much to my surprise. Really, I don't know if too many people anticipated this, but it's looking good right now. Mahindra and autos have taken center stage really. Mahindra and Mahindra, Maruti Suzuki, Tata Motors, Bajaj Auto, Hero MotoCorp. These are the ones which have really done well. All five within the top 10 are auto names. That tells you a story, doesn't it, today? There is strength in Cipla on news, of course, up about 13%. Titan has gained about 11%. Who would have thought at the start of the trading day today there will be such a swift move for a Titan? There is strength in Bajaj Finance, about 8.5 at 2,535, so doing good for itself. And Kotak Bank has gained about 6.5. Well, what is not doing well is HUL. Tech Mahindra marginally off. It's almost a bit of a risk-on mood back in the markets because the Nestle's, Tech Mahindra, Adani Ports of the world are languishing, and the banks and some of the autos are doing rather well for itself. So really remarkable afternoon for the large caps. I'm guessing Navneet for the mid caps too is pretty strong.
Yes, Neeraj, absolutely right. In fact, for the last few sessions, mid-caps have been outperforming the frontline indices. And by the way, Nifty is closed above 9,000. We were highlighting that it's going to be a key monitorable. It's the first time after 16th March, I guess, we've been able to close above it. Of course, we've touched that mark twice or thrice in the last few weeks. But a good closing coming in on a weekly expiry day. Broader markets also, Nifty mid-cap index closing with gains about nearly 3%. The small cap index also registering good gains today. And a lot of gainers there. So we were talking about auto companies. Igarshi Motors is your top gainer in the Nifty 500 index, locked in upper circuit with gains of 20%. Then you had Motherson Sumi, looks like a short covering bounce to me because the stock's beaten down to the core, up about 19% in today's session. Then you had stocks like Minda Corp up 16.5%, RCF, outside auto, Ashoka Bilcon also had a great session, and Tata Coffee was up about 14 to 15%. Then you had stocks like Rain Industries, Shriram Transport. Remember the NBFC since yesterday bounced back, beat. Shriram Transport was up. Chola Mandalam was one of your top F&O gainer also for the day. And Ambuja Cement, which was down yesterday, and this one's bounced back and closing with gains of 5 to 5.5%. Lupin was the other one which saw fresh long positions in the future side. I also want to pull up IOL Chemicals right from the word go in the morning. The stock was locked in upper circuit with gains of 20%. Remember, the chemical companies have been in focus. While on the losing side, just want to highlight a few, though the losses today were pretty much restricted. It's a positive sign. Bandhan Bank has been weak, so that was just about flattish today. Amber Enterprises did not have a great session. Gati was up and about in yesterday's trade, so maybe some profit booking seen. And Godrej Properties, which gained 15% the day before yesterday's, I think last two sessions, it's cooled off and it's given up some gains. So that was down 1.5% to 2%. But good news is we're closing pretty much in the green across the board today, not just for broader markets. Volatility is cooled off substantially, so we're down 4.5% to 5% on that. And Davina, interestingly, last three sessions this week, particularly the volumes have bounced back. Cash volumes have been over 50,000, and today being expiry, of course, F&O is on the higher side, but still last few expiries, we've not seen turnover of about 17 to 18 lakh crore.
Yep. And as you said, the volumes are picking up even in the cash market. But today's session has got the breadth of the market also in tandem. Last 5-6 days, breadth of the market has been positive. Today as well, we've got an extremely positive breadth. 1346 stocks advanced, 21 stocks have closed in the red. So that's a good ratio to have. In terms of individual stocks and their contribution, you've got HDFC, which is contributing about 60 odd points to the gains for the Nifty. ICICI Bank contributing 36 points. HDFC Bank contributing 35 points. Kotak Mahindra Bank and Maruti Suzuki, along with Reliance Industries, that contribute 20 points. So the top 5 stocks, the majority of them are from the banking space. Aside from that, remember, this is the end of the week for us as well. So you're going to just tally the close, which is going to be a positive one, from Tuesday session to Thursday session. So a 3-day week is what you've got, and you've got a positive close for the week. But closing comments then from our technical experts. A quick word from you, Mohit. What's the call as we step into trade come next week?
Well, so far the Nifty has held up, and I think that we will continue this up move given the way we've held up pretty strongly. As I said, I would have liked us to close above levels of 9130, which was yesterday's high, but hopefully that happens on trade in Monday, and we can continue this up move towards levels of 94 to 9500. And of course, with that, the sectors that have had short covering and have had moved up will continue to move higher.
Okay. Got that. Rajesh, your closing thoughts?
Devin, as I said, pullback is looking on the chart, and my level to watch keenly would be 9200. And if we are surpassing this level of 9200, then definitely 9500, or even we can see Nifty inching towards the level of 9000 marks. So for a very short term is been concerned, 9200 is the level which I would be watching. 8800 is the level which I would be watching on the downside. It should not break. So the trend is looking positive. Any dip should be used to go long with the strict stop loss. And even if we look the NSE indices, almost all the indices, whether that be an auto or IT or FMC or private bank, PSU banks, they have closed on the day high. So which indicates the overall buying has been looking positive, and well, no doubt there has been a long weekend, but the things are looking positive, and it looks like bulls might be overcoming the bear right now.
Okay, got that. We leave it at that, gentlemen. Mohit, Rajesh, as well as Gurmeet. Thank you, all three of you, for being with us this afternoon. Before we wind up, I just want our viewers to get a quick snapshot of what's happening on ground. These numbers obviously are numbers from the morning, and they will get updated during the course of the day as well. But as of now, 5,734 confirmed cases, COVID cases. You've got 166 deaths that have been reported as of today morning. The largest concentration still lies in Maharashtra, where you have over 1,100 cases. But coming in close is Tamil Nadu as well as Delhi, where cases are spiking as well. So we will keep getting you more updates as and when they come in. But that's all that we have here on Countdown. From Navneet, Neeraj, myself, and the entire team that's put the show together. Thank you so much for watching, and have a happy long weekend.
The union to secure